Morning, everyone. How's it going? Just going to give it a few seconds for people to hopefully get the notification and come on here. Testing. All right, we've got one person in here. Cool, got a couple joining in now. Hopefully the notification's gone out to everyone. Where's everyone watching from? I hope you're all having a good weekend so far. Cool, 10 people on here now. Awesome. So, I usually try to put out a video most Sundays, so I haven't got one planned for today, so I thought I'd jump on here for half an hour or so and do a bit of a live stream and answer any questions you guys might have on investing or anything else like that. So fire any questions you might have through. We've got Sydney, Luis, is that like Mexico, Austin, Texas? Awesome. We've got no New Zealanders. I thought this would be the most convenient time for people in New Zealand. And hopefully you can all hear me okay. I've just literally hooked my lav mic straight into my computer, so hopefully that audio is all working okay. But fire through any questions you might have. The last couple of days I've been doing a bit of work, as you might have seen, on heritage growth properties. So I put up a community post yesterday of some kind of valuation work I've been doing after seeing Phil Town say he thought it might be worth $140 a share within 10 years. So that's been keeping me pretty busy. 3:01. Okay, that's not too bad on the timing. Cool. Where's everyone else from? So we've got someone from Perth, South Africa, Tutukaka. I need to go fishing up at Tutukaka sometime soon. You're very lucky. London, 140, yes. Yeah, so does anyone else have thoughts on SRG or any other stocks you guys have been looking at lately? Really, I haven't been looking into too many stocks recently other than heritage growth properties. I've had a lot of stocks always get suggested in the comments and that sort of thing, but I've been crazy busy recently, so I haven't had a chance to look into too many. But I have been trying to catch up on reading. I'm not sure if you guys saw my video a few weeks back on my sort of goals for the year and where I was at, and I was way behind on my reading target. So been reading a little bit of Joel Greenblatt. I've read his book Magic Formula, or the book that contains the magic formula. I'm reading You Can Be a Stock Market Genius 2 at the moment, which is pretty cool. A little bit different because it's not so much of a how to identify a good business and pay an appropriate price for it. It's more like looking at special situations. So it's talking about investing through bankruptcies and spin-offs and mergers and all sorts of stuff, which is quite cool. So awesome. We got people from Florida and the US. Hamilton, you're not far from me. Melbourne, Smith and Weston with the spin out Monday. Rich Dad Poor Dad. Awesome. We got someone from Auckland. I hope everyone in Auckland is doing okay, because I know you guys are back in lockdown at the moment. I'm in Hamilton, so luckily we're not in that situation just yet. We have got a question from Gus. Tom, quick question. Have you ever seen Aswath Damodaran courses on valuation? If so, what do you think of his approach to valuation? Yeah, I haven't seen his courses, but I've seen a few of his videos, and I've seen him on CNBC and that sort of thing talking about valuation. And he knows a whole lot more about it than me. So, yeah, I think he's a great guy to follow. I guess one area where I would be cautious is, I know that he often says like it's never too early to start looking at valuing a business, and I guess the approach that I take to that is you shouldn't even attempt to value a business unless you can understand it and understand what the potential cash flows are likely to be out into the future. I think valuation is inherently, by design, it's not going to be all that accurate over the long term, because you're largely trying to predict the future. So the more knowable the future cash flows of a business are, the more accurate you're going to be. And if you're trying to, put valuations on startups and stuff like that, it can be it can be tricky, and things can change very quickly, and your valuation can be wrong very quickly. But yeah, I do like a lot of the stuff that Damodoran puts out, if that's how you say his name. I hope I'm not butchering that. So yeah, good guy to follow. Anyone that talks about business valuation is a good person to follow in my books. It's basically all investing is about, really. If you understand the kind of value investing approach, it's basically identify a business, understand what it's worth, and try and buy it for less than that. And that can put you in a situation where you've got some downside protection. If you've paid less than what the business is fundamentally worth, that should give you some downside protection. And it should also hopefully create the opportunity for more upside as well, because if you buy something for 50% off, it goes back to its intrinsic value, then that's a double. And if that happens over 2 or 3 years, that's a really, really attractive rate of return. So that's the way I like to think about it. Question from Kaio Gaspari. I hope I'm not butchering your name. Hey Tom, what are your thoughts on Treasury Wine States? They had some big events this year, but price still away from the margin of safety. Great ROE, great ROIC. However, a bit more debt than desired. I don't think I'm familiar with Treasury Wine States. I think that's a type of business. I'm assuming by the name that's just like a vineyard and winemaker. I think that's probably the type of business I could get in my circle of competence, or is in my circle of competence. I've got an agricultural degree, but that has a fairly wide scope. So any sort of food, beverage production system kind of thing, I feel like I could understand pretty well. So that might be one I have to have a look at. If you told me all those things and said it's really cheap and doesn't have debt, I'd be jumping on it straight after the live stream to have a look. But yeah, I will have to add that one to the list. Mahomet, I hope again I'm not butchering your name. Value investors usually buy when the price of a stock is below the value. My question is, can the value evolve, increase or decrease over time? Yeah, absolutely. I mean, the value of any business is all of the cash that it will distribute to its owners between now and when it goes bankrupt at some point in the future, because just about all businesses do at some point, discounted back to an appropriate rate to give you a sort of present value of those cash flows. And that's all about trying to predict the future. So yes, those, the facts can change. The business can perform much better than you anticipated, or much worse than you anticipated. So it's important to give yourself that margin of safety and some protection. And I guess investing in higher quality businesses is going to give you a better chance of that intrinsic value appreciating over time. And that's sort of that transition, I guess, that Buffett made probably a few decades ago at this point, when he switched from sort of low quality businesses that are really cheap to high quality businesses that can compound over time. And it's meant he's had to make less decisions, so he can buy those businesses and just sit on them, and yeah, have the intrinsic value appreciate. So that's my thoughts on that. Oh, there's lots of comments coming through. I don't know how to say that name. MNKNDE, Tom, when calculating intrinsic value, what's the easiest way to convert enterprise value to price per share? I think if you just look at the share count, you should be able to do that. So if you calculate that the sort of intrinsic enterprise value is $1 billion, and you see that they've got 1 million shares, then 1 billion divided by 1 million is 1,000, so $1,000 a share. That's the way I would do that. Dallas Maru, what's best chart software or platform? I really don't use charts for anything to do with my investing. I mean, it's cool to look at charts and see what a price has done over time, but I really don't use that to inform my investing decisions. I remember when I was reading some of the early Phil Town books, I was looking at MACDs and moving averages and stuff, and I was using Yahoo Finance for that. But that technical analysis really isn't part of my process anymore. It never really was, to a large extent, but I found it interesting after reading Rule 1, but it's not really part of it anymore. Sean, do you like spin-outs with the exiting of institutional investors, a good market event for buying? Yeah, well, that's basically what I'm reading all about at the moment with Joel Greenblatt's book, You Can Be a Stock Market Genius. So I've never bought into a spin-off, or I've never invested in a company specifically because it's going to spin off a business, but it's an interesting area. I think like you say, a lot of people just, get the spin out of the new company and sell it automatically. So potentially can create some mispricing. But outside of that, I don't think there's anything magical about a spin-off, other than it can be mispriced more easily. So good little hunting ground. Raghu Chanda, I guess. Sorry, I'm butchering all of these names. But hi, Tom. Looking at inflation, do we need to buy gold or not? Dollar is losing its value. What is your approach to this? Yeah. So I mean, inflation, generally speaking, is bad for the investor. So I don't. I'm not a huge fan of buying gold. I've never bought gold at all. I think great businesses, owning really good businesses, can be quite effective for inflation. So, or protecting yourself against inflation. So, if you buy a property in a good area as a rental, and inflation happens, then you can charge more rent through that property, and you'll still be fine. And the other cool thing in that scenario is you'll still have the sort of asset value of your house probably go up with inflation, but your debt will, stay the same. Your mortgage doesn't go up because there's inflation. So you can sort of inflate away a lot of that debt, which is quite cool. So I think buying good businesses, Coca-Cola will be able to charge more in 10 years' time than they do today because of inflation. So buying good businesses is actually a reasonable approach to that, and that's kind of Buffett's methodology as well. Hi, Tom. Thoughts on US stock bubble and investing in GLD/SLV? I assume that means gold and silver. So see previous answer. As far as US stock bubble, I guess, there's been some crazy price movements upwards. The way I sort of think about it is I'm very focused on individual companies. So, whether the market is expensive or cheap doesn't really factor in too much to what I'm doing. It just means I might find, more or less opportunities. Spooky Scary Skeletons. Yo, should I get pizza or ramen for dinner tonight? Definitely get pizza. I would go for pepperoni. And I also like to get like a garlic bread pizza on the side. So that's what I would go for. Airbnb is about to go public. What could be the competitive advantages in your opinion? So competitive advantages for Airbnb, I guess Airbnb is essentially selling the commodity of accommodation. So anytime you're selling a commodity like that, I think it pays to be the low cost producer. And that is basically the advantage that I think Airbnb has. So, you can get Airbnb accommodation a lot cheaper than staying at a hotel or renting out a house in a more traditional fashion. So that's definitely a competitive advantage to keep customers coming to them. And I think they've probably got some competitive advantages in terms of like a networked effect. So now that they've got themselves sort of established, I think it's going to be more difficult for people to basically build the same thing as Airbnb and try and, push them out of their niche. So those are some things I think about with Airbnb. To just keep doing the great work, bro. Your value investing videos are amazing. Got to learn a lot. Awesome. Thank you. I always appreciate that. Tom, what happened to your Chiefs? We're not going to talk about that. I won't talk about the Blues either because I think they've they imported a few gems which helped there. So John Johnson, have you managed to be able to approximately value the SRG assets as they stand in 2020? That's something I'm still working on at the moment. So I think there's two main things I still need to figure out with SRG. The first one is, if you saw the community post I put up yesterday, it looks like both Monish Bobry and Phil Town think that SRG can get close to producing, in and around $1 billion in net income in 10 years' time after all their redevelopment's done. So I need to figure out, one, how realistic is that? And the other thing I need to figure out, is the asset values, because I think that is a lot of the margin of safety and the sort of downside protection, is if we can buy into SRG at less than the assets are worth, particularly less than they're worth even in distress situations, if, the pandemic goes on to cause more issues. They're kind of the two things I need to figure out. I think there's a good chance they're still trading at less than their net asset value at the moment. Don't take that as investment advice, but those are kind of the things I need to look at. Alcos, a holding C limited? No. Mohammed Tunkara, what is your compound annual growth rate since you started investing? I don't actually know off the top of my head. I could probably go into my share site account and figure that out. I think, I guess in my early years, so I think I started investing in probably 2017, roughly. That year I was up versus the market, and when I was looking at the market at that point, I was comparing against like a New Zealand top 50. But that was just dumb luck more than anything. Honestly, I really had no clue what I was doing. This year I have not. This year I've probably been lagging the market. I haven't added a lot to existing positions, and I had one investment that I ended up exiting because they were hit pretty hard by all the lockdowns and everything. So I'd imagine this year I'm probably down, but I really don't know what like my long term compound annual growth rate is off the top of my head at least, but definitely very important. Long term. Have I ever read the? Oh, where's that gone? Have I ever read The Outsiders? How do you think might be a good way to measure the CEO's track record of capital allocation? Stock price might not be so good due to many external factors. I think no, I haven't read The Outsiders, but I have heard of that book, and I need to get to it at some point. As far as assessing a CEO's track record, I think return on equity and return on invested capital are really good ones to kind of monitor how that management team is performing. But you always also need to put it in the context of the business. Like, I think it's easy to look at a company and say, you've got one business with a 20% return on invested capital and one with a 10% return on invested capital. Oh, the guy with the 10% return on 20% return on invested capital must be a better manager. And that's not always the truth. I think some businesses are just easier than others and some are harder than others. So I would more look at, where is that return on invested capital or return on equity trending over time? Possibly look at some debt levels as well. As businesses went through a one-time event with the COVID, do you take their pre-COVID earnings to value them or their trailing 12 months earnings per share, including 3 months of full shutdown? Depends on the business. So if you think the business is going to get back to where it was, over the next couple of years, I'd probably be inclined to use more of a normalized earnings. If there's going to be long-term negatives, then maybe we tone that down a bit. Sly Badger, great YouTube name. How can we judge management? Buffett talks about it, etc. Do you look at their dividend buyback policy, things like return on invested capital? So I guess we just talked about some things there with return on invested capital, so that definitely covers part of it. I also like to just watch interviews with management and read their letters to shareholders and stuff like that to get a bit of a feel. But it's definitely one of the less mathematical components of investing. So it is a tricky one, but there are some things I like to look at. Hi, Tom. What do you think on the role of options for long-term investing? I worry about tax implications. I've never used options. We don't have easy access to them here in New Zealand, so it's not something I've ever dug into that much, to be honest with you. Akshay Lula, hi Tom, do you plan to start probably reviewing businesses that you might be studying in the US market, or maybe like do case studies on the business models and current valuations, not recommendations? Yeah, so I mean, I try to do those videos every now and then. I think I've done the most recent ones I've done is probably New Zealand King Salmon, which is a New Zealand business, and I did a Netflix analysis not too long ago, probably a few months ago at this point though, but I do enjoy doing those videos. So yeah, for sure, if there's any I'm doing a deep dive on, which I think would be interesting. I guess a lot of business I sort of look at and I just say either I don't understand it or it's too expensive and it's, pass, move on to the next one. So I think if I were to do a video and just say that every time, it's probably not that interesting. But if I find anything that I think would be valuable or you could learn something from, I'll definitely do that. Finance with JCL, have a look at Plus 500 Limited, looks undervalued on DCF. I will do that. I think Plus 500 is like a trading platform, isn't it? I feel like I see ads for them all the time. They probably give me some ad revenue, but I'm not super familiar with them. Hey Tom, thanks for your awesome videos. Could you recommend a book that teaches valuation besides Rule 1, The Dundo Investor? So yeah, rule one and the Dundle Investor are probably the main ones that I've picked up valuation from. You get a bit of that from Ben Graham's teachings, so you could look at the Intelligent Investor for a little bit of that, although he doesn't give like a specific formula, as far as I recall at least. Or something like security analysis if you really want to get into some detail. I haven't read that, but I will get to that at some point. Do I still own GraphTech? Any regrets owning it? Yeah, so I do still own GraphTech. I wouldn't say I have regrets owning it. I think that the pandemic definitely hurt GraphTech, and that's probably not something you can predict. So yeah, that's where I'm at with that. But I still hold it. I may sell it 5 minutes after this video, so don't take anything as advice here. But I do still own it. Have I ever used any software products like VictorVest, Simply Wall Street, or Stockopedia? I'm not familiar with VictorVest, or I might be familiar with Stockopedia, but I've seen Simply Wall Street. I don't really like. I'm not really a huge fan of those like things that just automatically estimate. Give an opinion based on a few metrics that like a computer can do. So I think it pays to just do your own due diligence there. Man, there's a lot of comments coming through, jumping around a bit here. Sorry. Hi, Tom. Just a question on Robinhood. If I put in an order to buy some shares of a stock at a certain limit price, will Robinhood sell this information to institutions so they can take advantage? I don't use Robinhood. I'm pretty sure we don't even have it in New Zealand, so I don't know. But I have heard about them selling info to hedge funds, so I'm not too sure on that one. What have we got? Tom, any good suggestions on learning more on accounting courses, books? That's an area that I need to get to as well. I feel like I've got a reasonable handle on accounting, but could always be better with that stuff. And then the accounting standards change depending on where the company is that I'm looking at. So whether it's the US or Australia or New Zealand, the standards kind of jump around. So but fundamentally, each financial statement, I guess, is trying to tell you the same thing, regardless of the country. So I believe Warren Buffett actually has a really short text out there on understanding accounting. I forget the name, but a bit of Googling might get you to that one. Have you read One Up on Wall Street from Peter Lynch? Yeah, it was a great book. I've definitely read that. If yes, what insights can we leverage from this growth investor and apply it to our value investing practice? I think the main things I learned is that, small investors who are out there in the real world just kind of wandering around and seeing these businesses can pick up businesses a lot quicker than institutions often can. So that's a good bit of kind of scuttlebutt and a way to find new investments. Maybe earlier than others. I've spoken about this a bit, but I don't think that growth investing and value investing are necessarily different things. Like growth is a component of value investing. So, yeah, growth definitely helps you over the long term, assuming that you can pay a reasonable price. If you pay 100 times earnings for a business, it's just going to have to grow at stupidly fast rates to outgrow that, to grow into that valuation, I guess. So, all considerations. Do you own Baby Berkshire, Markel Corp shares investments managed by Tom Gaynor? I don't, but I've looked at it pretty closely. I leant towards Berkshire instead, just because I've got a better understanding of that business. Do you think Amazon is overvalued? I don't think it's cheap, but again, it just depends on how quickly it grows. Like if it continues to grow at huge rates, then it may well turn out to be cheaper those prices. But it's not a no-brainer, so I don't own it. Thanks for your response. Have you ever studied or looked at Micron? What do you think of future prospects of the business? Yeah, I've actually done a video on Micron from a little while ago. And my opinion hasn't changed too much. Basically, it's not a business that's in my circle of competence at all. I actually work at a ag software company. I was talking to one of the guys about Micron when I saw that I first bought it. And about 10 seconds into that conversation, I was just like, it was all over my head. So although I work at like an ag software company, I'm the ag guy, not the software guy. So Micron's really not in my circle of competence, so I don't own it. Maybe I could get there if I spent enough time on it, but it's not something that I've done. Thoughts on Damodaran's valuation methods? Yeah, we had that question earlier. Sorry, so I won't bore you with the same answer again. But I'll put a replay up of this live stream, so if you want to see that, go see that. What's your favorite lift? Squat, bench, deadlift. So probably it sort of jumps around depending on which one's going well. Probably squat, but I'm doing a bit of strongman training at the moment, so I'm enjoying doing Atlas stones and that sort of thing for something different. I think James Hodgson. I think Philtown used a 90% of tangible book value to value SRG. He recommended it recently. I've heard him say that about banks. Not sure on SRG, but you may well be right. I'm not too sure. Reggie Matthew, thoughts on Sky? Dying business. They may turn the thing around, but I don't think you should invest based on hope personally. So that's Sky. J Kelly 7, are you a fan of ETFs or mutual funds as long-term investing? ETFs, yes. Low-cost index funds, I think, are a great option for a lot of people. Again, not advice, but the research is pretty clear on them outperforming the market equally in the market, outperforming actively managed funds over a long period of time. So yeah, I like them. Mutual funds, not so much, because you've got higher fees and they're generally actively managed. And the higher fees generally outweighs is a bigger negative than the positive of, good active managers oftentimes. So the questions are jumping around a bit there. I'm trying to race through these because there's lots coming through. So Timmy Pom is DCF your favorite way of valuing a company? Short answer is yes, but depends on the company. Like with a business like SRG, Seritage Growth Properties at the moment, I'm looking at more of like a cap rate method because it's a REIT. It's a real estate investment trust, so I think that's more appropriate. And also liquidation value is often a reasonable proxy for like a floor of valuation for businesses that maybe aren't making money, that are candidates for buyouts or activists to go in and liquidate and that sort of thing. So hey Tom, what's your thought on INTC and Cisco after the recent drop, given I want to hold for a minimum of 5 years? Not businesses I'm super familiar with, sorry. Usman Khan, thoughts on Biogen? It's held by Berkshire Hathaway and it's a cash generating machine. The Alzheimer's medicine, however you say that word, is pending FDA approval and the business seems great even without it. Again, business I'm not familiar with. I apologize if this is my answer for like every individual company you ask me that it's a business I'm not familiar with, but there's a lot of companies out there and there's not all that many that I've done deep dives on. So coffee or tea? Definitely coffee. I drink far too much of it. Vbocage. Do you invest in microcaps considering there is greater market inefficiencies and illiquid stocks outperform liquid stocks across all market caps? Yes, I do. So I think you're probably right that there's likely to be more mispricings in smaller, less closely followed companies. But I don't I don't invest in a company specifically because it has a certain market cap. It's all about what's the intrinsic value, how confident am I in that assessment, and that's basically it. So how cheap is it relative to that intrinsic value? If it's a large cap or mega cap or micro cap, it doesn't phase me too much. So do you have any thoughts on royalty business? I own Texas Pacific Land Trust, ranked really high, number one toolbox. I don't have much to add on that, sorry. Divi Jane, do you think it's time to start offloading positions because of some of the market valuations? Yeah, as I said earlier, I don't really look at the overall market as a means of making investment decisions. I'm very focused on individual companies, and so that's the way I approach it. And if I was more of like an ETF investor and just buying the whole market, I think it pays to just buy it consistently. And if there's fluctuations up or down or sideways or whatever, if you're buying it consistently, you get like an average price over time. So it should sort of even out a lot of those fluctuations by just dollar cost averaging. How's the COVID situation over here? Oh, where's that gone? Sorry, I've lost the question. How's the COVID situation over there in New Zealand? So yeah, we went, I think it was 100 days with no community transfer. And the only COVID present at all was from people coming through the border, and they were getting quarantined for 2 weeks, and that was working really well. We've since had one cluster, I think it is in Auckland, of initially, I think, 4 cases. And Auckland was back in lockdown pretty quickly, and we're sort of one level away from that around the rest of New Zealand, but hopefully they can sort that out. Still, yeah, super grateful because it's far better than many other parts of the world. So, Mohammed Tunkara, when you come into Sydney, I'll pay for a beer for you. Really good videos. I appreciate that. I hope I can get back to Australia at some point. I was over there. I've been over there a few times over the last year or so for work and personal trips. So cool part of the world. I've never spent too much time in Sydney though. I've been to Sydney in a layover, but I've spent most of my time in Melbourne and even a little bit in Tasmania actually. So Blake Houghton, hi Tom. Would you treat debt differently for a REIT like Seritage Growth Properties? I see they have a large amount of debt, 1.6 billion maturing in 2023 with their negative. I assume that stands for operating cash flow. I guess I don't treat it any differently, but it is important to understand, the terms of that debt. So I think that Berkshire debt is like, so that 1.6 billion is to Berkshire, and I think it's going to probably become 2 billion if it hasn't already. I think they're paying like a 7% interest rate, and a lot of it's due, like you say, in 2023 by the looks of it. So I think with SRG specifically, if they're short of cash, they can probably sell off some assets, which is a strategy they've chosen to take in a few situations, because they basically have some properties that are really prime candidates for redevelopment, and after redevelopment they can like 4x the rental income on those properties, and they have other properties which are less attractive in terms of redevelopment, which they can liquidate. So yeah, that's the way I sort of think about it. Any views on CDL Investments NZ? The fundamentals look good, but it's a stock price that's pretty much remained flat for 4 years. I don't know of that company. Sorry. Good cash flow for Sky and dead cheap from Reggie Matthew. Are we talking about Sky TV? Because I feel as though they wouldn't have good cash flows, but maybe I haven't looked at it closely enough. And again, thank you for the super chat, $2. I think that's my first ever super chat, so thank you very, very much for that. I appreciate it. If you've got a question or anything, definitely fire that through. Akshay Lula, when do you plan to start looking at the Indian market, the pharma, active pharma ingredients, and contact manufacturing business going through some great tailwinds currently? So I'll look at businesses most places. The markets I have the easiest access to with my brokers are New Zealand, Australia, and the US. So for businesses outside of those 3 areas, I'd probably have to find another broker again to actually purchase into those. But I'm not opposed to investing in businesses in other countries. Yeah, pharmaceuticals specifically, I think there's plenty of people that understand pharmaceuticals much better than I would, so I don't have too many thoughts on that. Thoughts on CBD NZ, so that's Canna South, I think. Last time I checked, they didn't even have revenue, so it's not saying I'll never invest in the business, but it's just too early days at this stage. Jay Kelly, is it difficult to invest in UK shares in NZ? It's hard from... Oh, jeez, I've lost your question. It's difficult to invest in UK shares from NZ. It's hard from here in the UK to get access to ASX and NZ shares. I'm pretty sure you can do it through one of the banks, ASB, over here in New Zealand. And if you went to someone like Interactive Brokers, they have most markets. So it's doable, but from memory, with ASB, it's pretty expensive. Supernom, should I get KFC or a pie for lunch? I would go for probably a 6-pack Wicked Wings, and I'd also get like a cookies and cream crusher to wash that down. So, do you know what platforms can be used to invest in Canadian and Indian exchanges from NZ? Yeah, so I think it's probably something like Interactive Brokers might be worth a look. Here, how do you calculate the liquidation value of a business? So you're going to be doing some digging on the balance sheet numbers. So looking at all of the tangible assets the company owns and trying to understand what type of assets they are. So if it's cash, that's real money. If I've got $100,000 of cash, that's $100,000 that will still be there at liquidation. If it's real estate, you can probably get reasonable prices, but if it's like highly specific, machinery for making some specific part of a car or something for that specific business, that's not of huge utility to other companies. So that's probably got minimal value. So it's trying to understand those sorts of components, accounting for any debt that the business has. Those are sort of some of the things that you should be thinking about. And Kumar, Tom, do you use Graham's value formula for finding intrinsic value? Do you like DCF better or Phil Town's Rule 1 method? DCF. Thoughts on Liberty Global? Quite a few value investors, including Seth Klarman and Warren Buffett, are in on it, and their merger with Teller. Yeah, not familiar with the company, honestly, so sorry about that one. Hi, Tom. What's your performance year to date? What's your take on technical analysis? As a value investor, do you look at technicals to define entry points? So I think I'm probably pretty similar to the market this year. I think I already mentioned this earlier, but I've had one business in my so I have a pretty concentrated portfolio. I've got one business in my portfolio that has done extremely well this year. So that's if it wasn't a kind of compounder, high quality type business, I'd be thinking about selling it because I bought it for 50 cents on the dollar and it's appreciated to intrinsic value or thereabouts. But I've had other businesses that are either one of them is down, one I've had to sell. And I also have a reasonable percentage of cash. So I'm probably about flat, I would say. Whereas I think the market's about flat as well. So, or it might even be slightly up. So maybe I'm a fraction behind, but that's roughly what's happening. But I think probably when you're judging someone's performance, I think it's important to understand a reasonable time frame. I think probably 3 to 5 years or something like that is a reasonable length of time to understand whether there's actually any skill involved or it's just pure good luck or bad luck on the part of the investor. So okay, lots of questions coming through. I apologize if I'm accidentally skipping you or I'm not keeping up here. We have got and sorry, I don't use technical analysis to answer the other point of that question. Thanks for your educational videos. Thank you, Timmy. What's your annual return objective? As high as I can get it. No, I think I follow a lot of the Monash per buy kind of strategy where I try to buy $1 for 50 cents, and if it doubles in 3 years, that's 26% a year. That's obviously a very, very good rate of return long term. So if I can get anywhere near that, that would be phenomenal. You have a nice book collection. I miss a few. Can you describe Poor Charlie's Almanac in 2 sentences? Okay, let me formulate some sentences. No, so Poor Charlie's Almanac is basically a collection of writings about Charlie himself from other people and a collection of talks given by Charlie Munger. So it's not really a book that you would read cover to cover. It's more of like a coffee table style book where you can flick it open and get some nuggets of wisdom without having to read it first page to last. It's really, really good. And Agape, apologies if I'm butchering your name there, man. Thoughts on how to value banks? So I think probably I'm no expert on banks is the first disclaimer to what I'm about to say, but I think looking at something like tangible book value, and then also just understanding the different arms of that business. So some businesses will have a large commercial lending component. Some banks will have a large sort of like home loan book. Others will be looking more at, lines of credit and personal loans and credit cards and stuff like that. So understanding how the business actually makes money is important. And then that should hopefully help you understand future cash flows. And then book value and tangible book value is, I think, one of the metrics that still works pretty well for banks. So some things to think about. Alcos, thoughts on Virgin Galactic, speculative. Dr. Sega V, which YouTube channels do you like? I think yours, if I'm not mistaken you for someone else, I'm pretty sure you have Indian Focus Stock Market YouTube videos. I've watched a few of them. They're pretty good. So other YouTube channels I like. So I watch Brandon over at New Money, formerly Aussie Wealth Creation. Who else do I watch? I basically watch anything that comes out off the Monish Prabrai and YouTube channels, or anything that Guy Spear's involved in. They're not really YouTubers, but yeah, Brandon's really good. Hamish Hodder's pretty good. Brad Kellner is really good. He's only got like 1,000 or 2,000 subscribers, and he's pretty new, so go and check him out. There's probably others that I'm forgetting. Compounding Everything is also pretty good. Also quite new, but those are kind of some of the people I follow. Sven Carlin. I'm going to be forgetting heaps of them, but that's a few of them. Is PLX worth at these prices? Don't know the business. Thoughts on Neo? Speculative. Let's see. Sorry, there's a lot of comments coming through here, so they're jumping around on me a little bit. Thoughts on Hamish's valuation spreadsheet? I assume you mean Hamish Hodder, and I think he's got a couple of spreadsheets. So he had one that followed like a very Phil Town Rule 1 methodology, and I think he might have a discounted cash flow one. I watch all of Hamish's stuff, so he's really good. Hey Tom, have you got any gold or Bitcoin? No. J Kelly 7, I was looking into a chip manufacturer in my portfolio. I'm considering Taiwan Semiconductors. Semiconductors really are my area, so I probably can't help you too much there, sorry. Anand Kumar, hey Tom, mate, your channel is highly undervalued. You and my respect today, because you're applying to everyone, including two of mine. Appreciate it. Thank you very much. Do you have a group you discussed investing, like TRPS, Stig, and Preston's mastermind group, in real life? No, I don't, to be honest. There's a few people that I talk to online. I've just recently, actually, and I see there's a question coming up about it next. I actually just recently joined the Corner of Berkshire and Fairfax forum. I'm yet to post a thing on there, but that will be a useful place to go, I think. Because it's a bit of a weird topic in New Zealand. There's not a lot of people that are really into stock market investing, and even more like, in this little niche of these, value investors looking for these weird little undervalued companies and stuff like that. So do I use Go? Yeah, so from Mech TVK, yes, to answer your question, I use Corner of Berkshire and Fairfax. That's a good question. Are you looking at crypto? No. Am I a shameless cloner? Yes. Well, shameless in the fact that I've got no. I'll copy people, but I have to understand the business first and all those sorts of things. So it's more of an idea generator than something I'll just like instantly copy the day I see someone owns a business. Henny VD why would SRG have a 7% loan with Buffett if they could get a loan with the banks at a low percentage? Am I missing something? I don't know if they could get a lower percentage loan with the banks. I think if you're an individual looking to get a loan on a house, you can certainly get lower rates than that. I don't know that it would be the same for a corporation, but it's probably not my complete strong suit. Cam Walker, do you like Stock with Sam? Yep, I watched a couple of his videos. He's a cool dude. Good to see, some more Kiwis on YouTube here, so that's cool. Alex Steep, hi Tom, I'm learning the value investor philosophy and theory. However, I'd like to learn the step-by-step investment process, the practice. How could you recommend your videos that focus on the practice? So I think if you watch basically any of my like individual company analysis videos, that sort of takes you through my process. I don't know if there's too much more I can tell you on that. I guess I try to get little nuggets of wisdom, I guess, across in each of my videos, if possible, to try and give you some perspective on how I kind of think about things. But as far as step-by-step practice, I kind of follow like Phil Town's forums, meaning understand the business, moat, competitive advantage, management, and margin of safety. So what's the thing worth? And if I'm confident in all of those steps, then that's, a potential investment for me. Angus, will we see you at Nationals this year? Not, I won't be competing in powerlifting nationals. I didn't even do the regional champs this year, but I may do a strongman competition later in the year. So I hope nationals still goes ahead with everything going on, but maybe next year, hopefully, you'd out deadlift me anyway, Angus. Jay Kelly, thanks, Tom. Appreciate your insight. I'm not a huge value investor, but I'm starting to apply some of the principles for sure. Awesome. All intelligent investing is value investing. Always remember that. Andre Senra, thanks for the answer. Thanks for the answers, Tom. I'll throw you another one. Do you hedge your investments when buying in foreign currencies? I don't. I don't do any hedging of foreign currencies. You might argue that that's good or bad or whatever. I think if you're right on the business long term, then hopefully the exchange rate changing isn't really going to matter. If you can buy something that does 30% a year over the next 5 or 10 years, that's going to be a spectacular investment regardless of which direction the exchange rate goes on you. So I don't, but if there's ever, certainly no like foreign exchange trade or anything like that, but if there's ever sort of unusually high or low exchange rates in either direction, I'll sometimes shift more New Zealand dollars into US dollars or Australian dollars, just so I like to have a little bit of money sitting in basically those three currencies, so New Zealand, Australia, and US dollars, just so that if any potential investments come up, I'm not caught out with an unusual exchange rate that goes against me when I need to transfer New Zealand dollars across to another currency. So that's sort of the way I think about it. So I might just take a few final questions here. I know we've been over 45 minutes, but the questions are coming through. Maybe we'll keep going. Shirag Daji, what are you looking for in 10K reports when trying to understand a new company? Would you use the 10K as your only source for understanding the company? What other platforms do you use? So again, it depends on the business. So yes, definitely read the 10Ks. I also really like conference calls and just investor presentations because I feel like just listening to executives discuss the company and analysts ask questions really helps me get a handle on what are the key drivers of how the business works. Outside of that, in a 10K, they're really useful for looking at like obviously the financial performance of the company, but understanding just really formally laid out the different risks that the company is potentially exposed to and that sort of thing. And again, do you invest in real estate other than REITs? Currently, no. If a good deal popped up, jump on it tomorrow. I would jump on it tomorrow. So not right now, though. So a lot of advantages to real estate, though. Especially leverage, but New Zealand does have a pretty steeply priced housing market, in my opinion, just because interest rates keep going down, which is probably justified, but that's sort of where we're at. Alex Steep, thanks, Tom. All good. I forget which question I answered for you, but glad you appreciated it. Andre Senra, being a value investor, you're naturally a holder, but do you set up stop losses in case Talia is right? I do not set up stop losses. Again, if you're right on the individual company over the long term, then you should do reasonably well. And if there's fluctuations in the market, then those are potential buying opportunities, assuming that your thesis isn't sort of broken with that company. So have you considered investing in real estate in Australia, as it is a more accessible market in Brisbane, I think, anyway? I've never even thought about it, and I don't know. I mean, I don't know the foreign investment rules in Australia. So yeah, never even thought about it. Camille lineage. Would you put money on Tesla at the moment, or would you wait? Again, it's not a no-brainer. So I think sometimes, especially in some of my older videos, I might have come across as overly negative towards Tesla, possibly. But basically, I'm trying to understand, figure out future cash flows of a business. I probably sound like a broken record here, but trying to figure out how much money a business can return to you over time, and pay an appropriate price for that. And I don't know how to answer the first question on that for Tesla, which means I can't buy it. And in particular, the crazy, frankly, valuations that are getting slapped on it at the moment and the performance that it's going to have to do, it's nowhere near a no-brainer. So it's not something I'll be putting some hard-earned money into. How much time do you devote to your investing practice in a week? Not as much as I would like to, or as much as I should. I try to do. I've been pretty slack on reading this year, but I try. In a perfect world, I'd probably read for like half an hour each night, and maybe do some more individual company stuff on the weekends. But I've been struggling to keep that schedule, honestly, just because of it's pretty life's pretty hectic at the moment. So, um, Blake Houghton, who's going to win the North versus South rugby game? Definitely the North. Andre, thanks for your answers and keep producing the sweet content. I appreciate it. Thanks for answering my questions. Send me your postal. I'll mail you some protein bars. Yeah, maybe I'll have to set up like a PO box or something at some point, because a couple of you have been very nice and sent me stuff. Luis, I'm not sure if you're still watching, but he sent me a book, a signed copy of Payback Time from Philtown, which is really nice. And others of you have sent me some stuff as well, which is always cool. So maybe I'll have to set up a PO box at some point. Who knows? I'll throw in another one to keep the party going. Do you know any screener that covers the intrinsic value of a stock or the Graham value? I think the intrinsic value of a stock is not on a financial statement, or it's not something that is easy to calculate unless it's easy to calculate, but it's not something that's easy to do accurately. Unless you really understand the business. So I know some websites are out there trying to, take in past financials, doing projections of that, basically just extrapolation into the future and calculating an intrinsic value from that. I think if you were to buy a basket of those businesses, the lowest intrinsic value, it might work well. That's kind of what things like the magic formula from Joel Greenblatt are trying to do, is they're trying to buy above average businesses at below average prices. So potentially it could work, but I don't think you need that many businesses to work out really well for you over an investing lifetime. So I think, for me personally at least, and this will vary depending on the person, but for me personally, I would much prefer to go and study an individual business really well, just like I would buy a piece of real estate down the road, and go from there. So that's kind of the way I think about it. Luis is still here. Awesome. Last question. Fundamentally, please tell me why individual stocks are better or not than investing consistently in low-cost, broadly diversified total market index funds for the long run. So I think, to be honest, I think most people would probably do better in an index fund, just because I think investing is a lot trickier than people probably give it credit for. So, I think you have to have quite a unique personality and kind of a mindset to buy individual companies and, do well. I think if you buy something at 10, which you believe is 20, and it goes down to 1, you have to be able to hold on to that and, still believe that it's going to get to 20 if you're still confident in your analysis. And I think a lot of people don't have the wherewithal to do that. They're people that'll see it, they'll buy it at 10. Maybe they do think it's worth 20. Maybe they don't even think about valuation of stocks, and they just think, because it's gone up in the last 5 years, it's a good purchase. And then what they'll see is the stock will go down from 10 to 9 to 8. They'll start sweating. It'll go to 7 or 6 or 5. They'll start sweating a bit more, and then they'll sell it. And then, it turns out they were right in their analysis, and it's gone all the way up to 15, and maybe they've got FOMO and they purchase it again at 15, and then it goes back down again. They sell it at 5, and then it magically does go to 20. So there's a lot of stuff that kind of goes on in there, which over a long run, that scenario works out well for the people that hold the business. But I think a lot of people can just get caught up in emotions, bit of fear and greed kind of going on. And, that can be bad for investment results, frankly. So, that's what's happening there. And I think that, just dollar cost averaging into an ETF is great for the average person. But if you're watching an investing channel on a Sunday morning, maybe you're not the average person, and you do want to understand individual businesses. But yeah, that's what's happening there. What else have we got, could you recommend one resource to learn portfolio diversification? I don't have any, to be honest. Lots of people have very different thoughts on that, so I don't know that I could really direct you anywhere specifically. Buffett wrote about that in some of his early letters, just talking about how if he had 20 equally attractive investment opportunities, he'd have 20 stocks because there are advantages to diversification in terms of protecting yourself from individual events at specific companies, hurting you. But that's not the way the world works, and you don't get 20 equally attractive investment opportunities. So, the more confident you are in a business and the less downside risk there is, potentially that can be a larger position. And that's kind of the way I think about it. Do you have any investing psychology books that you could recommend? Not investing specifically, but there was a book that I read, and I'm forgetting the name of it. I'm just actually going to look this up. Just doing some Googling here. Yes. So, Manual for Living from Epictetus. That was actually a Stoic book and a recommendation from Monish Prabhai that I heard on a podcast he did. So that's actually really good. But it's not investing specific, I guess. And is that why you hold on to EAF? Not sure. You might be referring to something I just said in the video. I'm not sure what I said. Yeah, I still hold ETF because EAF. I don't want to get into it in too much detail, but they've still got good cash flows. They still have the competitive advantages in terms of low cost production that they had 6 months or a year ago. They've had some headwinds, and that has definitely hurt their performance, but yeah, that's kind of my thoughts. Again, I might change my mind tomorrow, but that's my thoughts. Have I read all of Buffett's letters? No, unfortunately. So I'm up to like the 1980s. I started in the 1950s, and I started reading other things, so I still need to finish that off. I have watched all the Berkshire Hathaway annual meeting videos from like 98 to today or whenever they were available. So the letters are really good. And Buffett has two T's. Psychology of Human Misjudgment by Charlie Munger video is awesome. Actually, yes, good point. Irrational Exuberance is a good investor psychology book. Haven't read that one either, but we'll have to check that out. Cool. Well, if there's no more questions, I have finally caught up. So thank you for everyone that tuned in today. I'm going to call it a day there, but I will put up a replay of this live stream somewhere. So if you're keen to rewatch it or anything like that, definitely check that out. But I thank you all for tuning in. We've got like 40 people on here, which is very cool. I think this is only the second live stream I've ever done, and we've never had that many people on, as far as I know. So thank you all for tuning in. If you want to see more of these again in future, just let me know in the live stream chat for the final few seconds that it's going, or maybe drop a comment on a future video that I do. But thank you all for tuning in. Hope you have a great day, and I will see you in the next video or the next live stream. Cheers.